It's the Market Sniper, and in this video I'm going to tell you why now might in fact be the most insane opportunity for trading leverage long on precious metals that has ever occurred. That's right, I'm going to be showing you why it's a key moment for gold. Gold specifically, this is a potential 130 plus risk reward ratio coming at you right here, right now. Let's get into the charts and explain what the hell we're talking about. So first of all, you may be familiar with this run up over here. This coincided with the 2019 mid-year period. It also had the 2020 special events that were brought to you by Pfizer, and then you went up and made that high. During this period, you have had a sustained period where gold has been disappointing. And many people were, gold's not doing what it's supposed to be doing. There was, of course, that key level that coincided with the events of March 2020 at 680. You had a technical breakthrough there, but this was the most important line, the capping, descending grind line that encapsulates the top end of a bull flag. That's right, you heard me say bull. The splitter on this little flag going through the lows here was the lower end. You visited it as well, and that is in fact the splitter of the macro continuation pattern on one of the largest bull flags you're ever going to see. And by the way, the original bull pole from around here was pretty brisk in getting up to the 2090 odd levels. So what does that mean? Well, we have a unique way of targeting in our community, and I'm going to tell you that in actual fact, the target we are generating out of this bull flag is going to take you to the doorstep through, in fact, the threshold of $2,900. We have a $2,905 target. Whether that means you get a technical blow off through the 3K before you pull back and rest, who knows? The momentum of the market at that point in time will determine that. But there's more. There's a whole bunch more. Not only is this a mega macro potential trade that I will be showing you, but you could be getting the most unique opportunity right now to get a 1:130 plus risk reward ratio on this trade. Now remember, to build 130 RRR, you are looking at a number of things needing to go right for you. However, it is so many fail, and you can have 10 goes and many fail, and all 10 could have been worthwhile on account that the overall gain, had you got one right, would be worthwhile. But I'm going to say to you, I think it's better than that. I think the likelihoods of success are high. So what are we going to talk about? Well, we're going to take you into this area here. So you have technically broken. For us, this is a triggering event. This is a triggering event of a better than, going right back to mid-year, July was the highs of 2020. You're talking of a better than almost 3-year, 2.5 years safely turnaround time, flagging period that you've triggered at. 2.5 years of churn in a fiat proliferation game where the banks have begun to fail. Everything is going down. Kenyan ministers are calling the dollar a busted flush. Everybody is kicking the dog that everybody suddenly realizes has to die. It's like the whole world woke up and is so smart. And I'm like, where have these people been for the last 30 years of my life? Well, never mind. Better late than never. But the more it gets spoken about, the more the word is getting out, the closer you are to that CBDC's release. So let's take a look at some of the other charts and show you why this is so interesting and how you might get all the way up to that unique potential trade. So what have I just done? Well, I've gone from weekly, can drop down to daily so you can follow this a little bit more slowly, drop down to 4 hourly, and then take you, boom, straight to the hourly chart. Now you can see where this is coming. This is a risk reward tool. Right now, 131.08 was the entries that I've successfully got if we get a target of 2,905. Many of you will be going, big if. Well, we'll see. You're not in it, you can't win it. What have we got here? Well, we've actually got a very, very interesting pattern structure, and I'm going to spend a little bit of time. So that red line is that same capping descending grind line. Looks almost flat, isn't it? Let me make it super fat just so that you can understand the significance of that level. You are fractalizing, and we teach you this in our program about the most unique way to get mega risk reward trades is on smaller setups inside much bigger setups. Don't add your way to wealth with individual trades with just a single component in the setup. Have multiple time frames of review that you're getting a setup within a setup within a setup, taking you on a macro time frame. Get the triggering event within all of that. Squeeze your stop and your risk entry to stop super, super low and tight. Be prepared to have a number of entries and take small losses. Lose $50, buy yourself a burger and a Coke. That kind of money. On the benefit that on the one that survives, you will go, and you will get 130 plus times. In fact, last night when we were talking with a community, there was a 233. You're not in that one. You're not in the community. First link below in the description. Book a call. We're trying to help you get wealthier in the reset time as the banks are failing, and as one particular commodity is going to be shown, I suspect, to be very, very useful and very non-fiat in fiat proliferation time. So I'm going to take you actually for a second into the 30-minute just to show you we've carved up this small little, I did this live with my community yesterday, all these draws. And we were highlighting that, in fact, even on the small time frames, you get fractals, you get patterns. That absolutely picked the bottom. Then you actually ended up with an inverted head and shoulders that gave you a target up top here. You blasted it. You then got a double top with the blue line there that then performed down and got you there. You can see that target. But within that, you actually got wait for it, let's change color so you can spot this guy. We'll go to the orange, Agent Orange, in honor of Christine Lagarde and the permatan look. One neckline. Oh, don't forget the legacy neckline from here. One left shoulder. The double top as complex head. We teach you about complex head and shoulders and how to spot real reversals. No one else does. Everyone tells you 3 bumps in the road. Yeah, ascending, descending necklines. No. You want to start building wealth. Get proper technical training. So head over here, complex head, tiny little shoulder over there, which in fact we like. Final capitulation, that brings you your armpit 2 and your armpit 1, and that head and shoulder was made to the downside as well on that downside draw. Wow. So inside what is essentially a 30-minute chart, I have shown you what is probably 15-minute patterns. That's right, listen to me. We're talking gold, and we're talking about micro time frame analysis. To me, doing anything on 10 minutes, 15 minutes, and 30 minutes represents micro time frame analysis. I do not trade the 5-10 minutes on its own. I do if it's triggering me into an hourly, 4-hourly, daily pattern, and then into a much larger weekly structure that we just showed you with a phenomenally well set up and structured bull flag that has just been broken and is setting up a fractal, you guessed it, iceberging around this red line that looks almost horizontal now that we're on the low time frames, that represents the capping descending grind line of a 2.5 going on 3-year flag, for which the gold price respected it 4 times before breaking it and is now sitting on it, winding up its structure. That's right. That's what you get from the Market Sniper, yours truly, and the crew and all my amazing people doing the webinars in the community with HVF method. You have just had one inverted head and shoulders one normal head and shoulders that brought you down. You then got one inverted head and shoulders that brought you back up. And then you got a second head and shoulders that brought you back down. And you've just double bottomed in here and started the journey up slowly, nothing too dramatic, Most people, it's just gold bobbling around, it's had a good run, near highs, who cares? All looking on the big time frames, not that big, not big enough, but not looking at the small time frames. This is what sniping is. It's recognizing on a big time frame that a key moment is coming and recognizing that you get a gift trade on the much lower time frames if you can crack a small time frame pattern that is the beginning of a major move to the upside that begins the up pole of a substantial bull flag of 2.5 to 3 years in standing. So what have we actually got? We've got the first impulse here. Boom. Should change color again. Go fat cokey. Who doesn't love a fat cokey? Yeah, bring it in, bring it in, bring it in the fat cokey. So we go back here and we will wipe our face a little bit. Too much of a Picasso going down there. One big boy down, big boy back up, second and down. Within that, head and shoulder 1, head and shoulder 2, inverted head and shoulder 1, double bottom 1, moving your way up. I'd be quite happy with us to jump around, maybe get a technical run of, you guessed it, the year 1984, George Orwell. Isn't it those times? Yes, indeed. A little technical poke through and a drift back down. What will you end up potentially with? You'll end up with a squeezy Japanesey. That's right, the entry that nobody else is seeing on gold because nobody else does technical analysis, macro technical analysis across multiple time frames and understands the real principle of accumulating mega R's with multiple time frame setups within each other that break you in so that you can have the stop of the smallest micro pattern and the target of the macro pattern. That is real alpha, friends. If you agree and you understood that, you go to the puppy licks button and you smash it right now. Boop, there you go. You're a gentleman, let me just say. Okay, so we are here to help you get wealthier. And you could have been in earlier, but now, hey, it's still not bad. So you're getting a little bit of a pullback churn around. I think you can bounce around. By the way, necklines. Why are you churning and slowing down a little bit here? Well, isn't it interesting? Kind of, you reversed on the target there, you reversed on the target there. Necklines, necklines, necklines. Oops, okay, we'll have a rest. 1975. Good year it was, key level of significance, round number. It is also serving as an iceberging level with that capping descending grind line, which I made fat and red so that you could see the big part of the big pattern. At the same time, I've taken you down to a 30-minute chart. That's right, friends. This is what we do. Respect the technical analysis of HVF method. You can learn it too. You can implement it too. By the way, for trading this, pure gold for investment, link below. I am using SimpleFX, link below. You can use crypto. The usefulness of that one is you can use crypto, by the way, for your collateral or USDT and lever up. I am also using Scandinavian Capital Markets, link below. Yes, awesome, you can trade. We're long gold against the Aussie. We're long gold against the dollar. That's right. We were the ones telling you new highs, that this was coming against all the other fiat currencies. Now we are standing on the threshold of the big D, the big dollar. That's right, the serpent with the line through it. Yes, yes, yes. Oh, a whole other story to do with you on that one. But let's keep it technical. Let's keep it gold. So what about the fact that I've said energies might go down? I mean, they've been going up the last few days. Let's go and have a look. So gold's valuation relative to oil. How many people did this for you? WTI in terms of the Dixie, not in terms of the dollar, and showed you that reversal head and shoulder. Yes, you're getting a return move right now. Yes, you're getting a return move against the dollar right now. But the macro says down. There's a problem. Demand destroying events are inbound, guys. Demand destroying events are inbound. So you're looking at the man that told you single digit oil and you should be long gold at the same time as you're shorting the oil. That's right, 2019. And here was the structure. This is it, USD WTI. There's your left shoulder. There's your head. There's your flattening right shoulder, all squeezing up against a spiller neckline That's right. And that is when it broke and it ran infinity, essentially. Naught, naught, naught. Because it traded $0. And when you divide $0 by gold's price, you get very much a $0. It's never been there before. By the way, this is not small time analysis. The big time frames are ultra reliable. Then we told you oil would bounce back. Didn't it just? Look at this beautiful little bull flag supporting. Where did it support? On our target of the head and shoulder draw that we did for you. By the way, I'm not log scaling this, even though I tell you to use log scale on the big time frames. Why? Because this went to naught and the scaling goes absolutely crazy. Okay, that's why I'm doing it. So now we're staying on the normal time frame. What have we got here? Broadening structure, very similar to the oil market, of course. Left shoulder, blow off head with 3 tops in it. Actually, that's a cute little Monarch head and shoulder. We'll come back to that in a minute. But an overall big head right there. And then you got this inverted HVF on the Dixie. Oil in the dollar index terms. Gave you this as an inverted HVF, one of our favorite structures, and we suggested you take it short. Yes, it's rallying back up. It is absolutely natural for the first break to get a return move to a key level of significance. That is what's happened over here. Let's go and have a look at the Monarchs. I'm going to wave goodbye our previous call that everyone ignored. I'm going to wave it goodbye that saw the biggest collapse in oil, simultaneous to the biggest run in gold. Gold shrugged off the events of COVID with a dip and a return move back up in as short as you could blink an eye. So onwards we go. We're going to dip and have a look at this next head and shoulders, the current one. Say goodbye to the legacy one. I might drop it to 3 days, get you a little bit more color, and we can squeeze it in. There she goes, there she goes. So from up the lot. You will note also that within that I referred to Monarch head and shoulders. That is the first, the inner, the most earliest of all the reversals. It's the warning. All the others cascade wider, broader, and beyond it. And it must perform. It must perform for the others to form and to have a chance of performing as well. It is the boss. It is the king. That's why we called it the Monarch. The king, the king, the king, the king. That is it. 0.05 valuation. Don't pay too much attention to these values. They should have loads of decimals behind them. You can't do that scaling that easily. There is your neckline. Boom, there she goes. Where did its target come? Here. We now have the explanation for why you are getting the rally on the oil. The Monarch head and shoulders was just made. By the way, it dovetails and confluences with the previous neckline of the highly successful biggest collapse in oil price in the modern era history or all time just before. That was the 2019 events. That's right. That's over there. That target confluence downward there, and it was the neckline there. Guess what? You're getting a bounce. It's called key levels of significance. Those are horizontal lines that have meaning, and it's not only support and resistance. Many of these lines run through the price behavior. This is one of the first chapters you learn with us and watch implemented with us while we are live trading, getting the trades, sorting the good ones from the bad and putting the excellent ones to the fore. You get to see a small amount of that free later on YouTube. Right now, I'm giving you a heads up. If you were to execute correctly on this, not only would you be getting into our community at a small decision level, you'll probably be buying a house without having to risk too much. Okay, this could be a seminal key moment. We will go back. So of course I expect a rally. You might come all the way back to the neckline, in fact, on that rally before you go further down. But I expect these targets to be run once again. In other words, an absolute halvening in the relative valuation and overperformance with head shoulders can occur. Remember the previous one. Boy, did you smash that target. You went to infinity, essentially zero in that case. So overperformance can occur as part of that journey. You could go somewhere around 0.01. You could be 0.01 and a half, and you're currently at 0.04s and something. Maybe it's 4.5. There's decimal places we can't see at this juncture. So This is showing to you there is a demand destroying event in relative terms to gold. So either gold stays flat and oil gets killed, gold goes down a little bit, oil gets double killed, or oil continues on up, apart from a small tip of its hat to the major event that they have baked in for us through the banking system, no doubt. Isn't it always the little Lehman's moment? Everybody will run to liquidity. The paper markets might dip. Trust me, the money will go in and they will ask for delivery. And that's actually going to drive the price even higher, because delivery they will not be able to do. Oh, if you actually want real gold, well, there's a different price for that. A bifurcation for the monopoly game, the gambling game on the paper price that the LMA and all the other criminals play around will suddenly become less of interest. People will want to hold their money in their hands. Okay, so that is the gold versus the oil. We have shown you this. So let's just go back and then put this back in context. Of course, you could get a little bit of churn. What's likely to happen next in terms of this? I'm going to take you back up to that hourly time frame and give you a little bit more context. So an opportunity to go a little higher. I would still see the 1984 potentially coming in, and then maybe a bit of a drift off, and then really low vol. It doesn't have to take this long. It could suddenly get some zip and zeal out of nowhere. You're on risk at this very, very moment. This was an entry you could have had as well. Our first entries were around here. You could have had this one as I was highlighting here on the pullback. If you'd had initially the stop below the low one, you could now bring it right up under here, 131. Where is that going? Well, it goes, and it goes all the way, my friends, to 2,900. See it climb, climb, climb. That is the risk reward. And I'm going to have to take you up to a 4-hourly just to show you that. There she continues to go. There she continues to go. Does it end there? No, but you could get a meaningful rest and pullback at that point. By the way, that is what we've just said at something sub 1975, taking you to essentially the doorstep of 3,000. We are essentially giving you a 50% trade in an asset. That is not a crypto. You know, you don't get moves like that in normal markets in commodities. That would represent a 50% increase. How long did it take to happen on the bigger time frames? Well, let's have a little look on it over here. We can do this on a cleaner chart with you. The time frame was round about mid-June to July. You're talking about 13 months. Boom, you went from 1160 to 2090. 1160 to 2090. That is verging on $1,000, around 900 odd dollars, 930 odd dollars. This is a bigger dollar amount, but not as big in percentage terms. But this is a bull flag of great note. Yes, your individual miners, particularly those with gold, and a little sprinkling of silver won't hurt in time. The gold-silver ratio, if we're calling for 2,900, and the gold-silver ratio on a head and shoulders to go down to 33-ish, don't forget we expect it to go further still, but that will be later stage gold bull market. This is a right here on your doorstep potential for the next year and a half, 18 months potentially. It could do it in 13 months. You've just seen 13 months up leg so far. In fact, the second leg can be even stronger up leg, because that'll be the third leg of, you know, the Elliott, the ABE, and then the BC. Your CD can actually do a 1.618. In other words, an additional 61.8% on the percentage move of this. There's lots of things you can do with this, but $2,905 could come very, very fast to you, and it would not necessarily represent the end of the bull run, but you may have another pause period for a certain duration during which those things will happen. Your gold miners could do very, very well. We've already highlighted a few too. There's others that you can come in and discuss with us in the community, and when, where, which ones are set up best, etc. These details that we're giving you here right now is an idea of why this could be your primary mover. Gold, 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 gold. Okay, you've just heard it from me. You know what to do next. Book a call, the first link in the description. Grab Pure Gold to buy and invest in gold. Awesome, guys. I use them myself. SimpleFX and Scandinavian Capital Markets. I use them to trade. I am currently long. I am talking my book. You've got to decide whether I've made a mistake or not. And gold is the buy, and this is the key moment. Until next time, I'll catch you later, and thank you for watching. And we'll see you on the other side, inside the community, building wealth in reset times. Bye for now.